Hello everyone, welcome to this price action and trade breakdown on EU. In this video, I'm going to walk you through this week's price action specifically from Wednesday to Friday, and I'll break down everything in a step-by-step manner using a top-down approach. I'll explain how I personally navigated through this week's price action, how the narrative evolved, and what were the valid trade opportunities throughout the week. You can then compare this with your own performance and see whether you are consistent or whether you may have had some inconsistency in your execution, analysis, or your narrative alignment. Now, I've already broken down the price action for Monday and Tuesday in the earlier video, so let's jump straight into the Wednesday's price action and let me build from there. First of all, I'm going to start off with a weekly time frame, and here I'm going to establish the high time frame brown liquidity and directional buys. So looking at the weekly time frame, you can see that we've taken out ERL or external edge liquidity, and now we are retracing back to fill internal edge liquidity or IRL. And if I draw out the dealing range right here, then you would see that we've got this inversion fair value gap inside the discount region of this dealing range, and along with that we've also got the consequent encroachment of this weekly fair value gap lying right around this equilibrium region, right? So what I'm expecting price to do is I'm expecting price to retrace back to at least the discount region, and then within that discount region we've got these key levels, right? We've got this inversion fair value gap and the consequent encroachment of the weekly FVG, right? And so what I'm expecting price to do is that once it fills this internal liquidity and taps into the key level, this key level could then serve as a catalyst for the next expansion, right? Once we fill this internal liquidity, then we can look for potential reversals from here towards the upside. But until then, the short-term draw liquidity in the short-term directional buys remains bearish. Now let's go down to the daily time frame and let's see what we've got there. Looking at this daily time frame price action, if you remember from Tuesday, then you'd know that we had a divergence with DXY. What happened on Tuesday is that DXY filled this corresponding daily fair value gap, whereas EU failed to do so, and that created a conflicting bias and conflicting signal on Tuesday, and because of that I stayed risk off and did not force any trade ideas or look for any trade ideas. However, by the end of Tuesday, price continued showing bearish order flow, and that divergence with DXY got invalidated, and that changed the context. And going into Wednesday, I was then again anticipating bearish price action, expecting price to continue toward the drawn liquidity lower, which being this refined daily fair value gap. That was my drawn liquidity on Wednesday. Now let's drop down to the 4-hour time frame and let me explain how I framed a trade idea on Wednesday and how did I selected my candle range. So looking at the 4-hour time frame price action, you can see that on Tuesday we had a clear bearish price action and a consistent bearish order flow. And this bearish order flow on Tuesday, on the second half of the day on Tuesday, was enough confirmation for me to now fully invalidate the DXY divergence that we had on the daily time frame, which meant that now I could again look for shorts for the rest of the week. On Wednesday, price action opened right here and price was sitting right inside this 4-hour bearish order block. And I anticipated price to react off of this order block to push price lower or to drive price lower into the drawn liquidity, which being this refined 4-hour fair value gap. What I did is I waited for this 1 a.m. 4-hour candle to close, and once it got closed inside this order block, I then marked it as my candle range, right? I also shared this outline or this trade outlook inside the group as well. I told you that I treat this candle as my candle range and this candle is my key level for our key level, and I look for order block confirmation entries once it gets purged. And once it got purged at a key time, I then looked for order block confirmation entries on the lower time frame and took a short or took a bearish trade idea towards this drawn liquidity. Right here on the 15-minute time frame, you can see that the 1 a.m. candle range or the 1 a.m. CRT got purged right here with this particular candle. And once it got purged, I then started looking for a bearish order block confirmation entry. I looked for this candle to get engulfed in the form of price closing below it, and once price closed below it, I took this candle as my order block. I took an entry right at the low of this order block with my stop loss above the order block, and I targeted the drawn liquidity lower. And you can see once price tested the order block and then pushed lower toward the drawn liquidity. Now let's talk about what happened on Thursday and how you could have navigated through this price action right here. You can see that on Wednesday we pushed lower towards the drawn liquidity as anticipated, and we filled this 4-hour fair value gap. Along with that, we also took out this low, and I took this low as my external range equity or ERL on this particular time frame. And since we had taken out ERL or external range equity, the next thing that I anticipated for price now is to then push higher and retrace back higher to fill this internal range equity or this 4-hour fair value gap before it starts moving lower towards the higher time frame short term drawn liquidity, which is somewhere right around here. I also provided you with the outline here on Thursday, and I told you that I'm expecting this 4-hour fair value gap to be tested first of all before we continue moving lower. And the reason I expected that is because of the relationship between ERL and IRL. We had taken out ERL, and because of this, I expected a midweek Wednesday reversal off of here, and I expected price to retrace back higher towards this internal range equity. And then once we had done that, after that, I would have then expected bearish price action. But what happened on Thursday is that we had this divergence with GBP/USD. We had this SMT divergence with GU. You can see that GU pushed higher as anticipated and filled the internal liquidity and took out this high right here. Whereas on EU, you can see that we failed to took out this high and failed to fill this internal liquidity because of this particular divergence. Now, if we hadn't had this divergence, then you would have seen price pushed higher, but because of this divergence, GU filled its corresponding internal liquidity, whereas EU failed to do so. So technically, my initial bias was right. On one of the correlated asset on GU, we pushed higher and filled the internal liquidity. And since we had this divergence, then off of here, I then again expected bearish price action straight away, because now we don't have to push price higher to fill the internal liquidity because GU has already done so. That is what happened on Thursday, and this is how I navigated through the price action. Regarding the entry opportunities on Thursday, I didn't find any trade idea because initially I was expecting to look for bullish trades towards this IRL, but then we had the divergence with GU, which created a conflicting bias and a conflicting signal for me, and because of that, I decided to stay risk off and didn't find or didn't look for any trade ideas.